Number two confluence that makes up a high probability flip zone. In my previous content, I talked about the number one confluence you must see before you can say this is a high probability flip zone. Now, in this video, I'll be showing you the number two confluence. Stay to the end and don't forget to share this content so that others can see it as well. Let's go. The number two confluence to a high probability flip zone is failure to take out the first liquidity pool or the high caused by the POS before sweeping the zone. That is the number two confluence you have to look at. Now, first of all, this is the illustration I used in the first explanation. I'm not going to be repeating them. If you've not watched it, go back and watch. Now, this is our uptrend and this is our break of structure. Ideally, you must have a break of structure to be able to identify that you have an order block left behind. So here we had our BOS and this was the demand zone left behind, and that's why market tapped into it. That's what I explained in number one. Now, number two, how do we technically confirm that a failed zone is now technically a flip zone, which is another trade opportunity? First of all, something you have to check is the high caused by the break of structure. Let me indicate. Sorry. The high caused by the break of structure. If you look at this illustration, you can see this is the high caused by the break of structure, the first high, or you can call it the liquidity pool. All the highs and lows that are outside or external to your zone, they are called liquidity pools. Now, this is the liquidity pool one, or you call it the first high, which is the high that caused the break of structure. Now, technically, a trade is considered successful if it is able to take out TP1. And where is your TP1? TP1 is the high that caused the break of structure. So when your trade is not able to take out this TP1 and it now swept your zone, we consider it a failed trade. And that is how you technically confirm a flip zone. Once market reacted to the zone, did everything it wanted to do, but it was not able to take out this particular level, which is the high caused by the break of structure, and then it finally fails, that is automatically a flip zone, confirmed technically. The fact that it didn't break this high, the fact it didn't take out this high before failing is what confirms it a flip zone. Now we can see market reacted from this level and it got here. This is where it got to, and then it finally failed. Market was able to react and get to this level, let's say something like 2 hours, and then it finally failed. So it doesn't matter whether it was in profit before, but the fact that it is not able to, it wasn't able to take out this first high caused by the BOS before it failed, that technically confirms it a flip zone. That confirms it a flip zone. So now this particular area becomes your next trade opportunity. But I will not be talking about that here. There is a lot to that area as well. But that is all about number two confluence you must see before you can say this is a high probability flip zone. And I hope you understand this. That's why I'm making the video short so you'll be able to grab and understand very fast. Thank you for watching, and don't forget to subscribe. Don't forget to share so that others can find this video helpful. Bye for now. Anticipate for the third video. And if you did not watch the first one, please go back and watch. Drop me your questions in the comment section. Bye.